Hello, and welcome to another newsletter from Construction Programs and Results. I'm Michael Stone, and I'll be sharing our newsletter with you. Devin and I have been busy cleaning up the outside of our home, getting the deck ready for use this summer, planting flowers and vegetables, and making things ready for barbecues, family time, whatever. Because of all the deer in our area, we have to put everything in planters and keep them up on our deck so they don't turn into a meal for the deer. I'm amazed at the price of flowers and vegetables that we are buying. One would think they are plated with gold. And speaking of gold, let's turn now to the subject of this newsletter. Cash flow needs. Cash flow keeps a business alive. A lack of cash flow will close a business. It's important to know how much cash your business needs and when, so you can plan ahead and have that cash available. To start, project your overhead expenses monthly. Not every month is going to be the same. Some months you'll have taxes due, other months it's an insurance payment, and start a spreadsheet listing your overhead expenses by the month for a full year as accurately as you can. If you have a company history you can use, that's great. It will be the most accurate record of your cash needs for each month. If your business is busier some months than others, you'll want to separate fixed and variable overhead expenses. Fixed expenses are the same regardless of how much revenue your business brings in. Typical fixed overhead expenses are any business rent or mortgage, your salary and the salary of any office staff, vehicle payments, phones, insurances, etc. Variable overhead expenses are things like fuel, sales commissions, job supervision, advertising, etc. You'll want to project higher overhead expenses during your busier months to account for those overhead expenses that increase when the sales volume is higher. Now you know how much cash you'll need to cover your overhead expenses each month of the year, and when you total it, your projected total overhead expenses for a year. That's how much cash you need on hand at the beginning of each month to keep your overhead bills paid. Divide your total projected overhead for the year into your annual projected sales to get your ratio of overhead to sales. For example, if your projected overhead for the year is $150,000 and your annual projected revenue is $525,000, your overhead then is 28.6% of your revenue, which is $150,000 divided by $525,000. Now divide each month's overhead by that percentage to determine the revenue needed to pay that month's overhead. If April's overhead is $13,500, you need at least $47,202 in revenue in the month of April, which is $13,500 divided by 0.286 or 28.6%. Once you know your required sales by month, work backwards to determine how much advertising you need and when to generate the leads necessary for the sales that will pay those bills. We talk about that and calculate your cost per lead, and a link to that article is in the notes below. Of course, overhead isn't the only expense you have. You also need to pay all job expenses on a timely basis. And that means using a payment schedule on your jobs that keeps payments ahead of or even with job costs. You can read more about payment schedules in our book, Markup and Profit, a Contractor's Guide. And all of this assumes you're pricing your jobs properly and selling them at the correct markup and appropriate sales price. The minimum price for every job is what is needed to cover all your projected job costs, your overhead expenses, and a minimum of 8% net profit. We talk about that in the article, A Minimum Price. A link is in the notes below. Did I say this was easy? It takes time and research and a little math, but the results will let you know if and when sales and revenue is needed to keep your business in a positive cash flow position. That keeps your business alive. Thank you for watching, and may the profits be with you.